Hey guys, I hope you guys are doing good today. A Tamil Nadu jewelry stock just got hit by a government by two punches. The first one is the Prime Minister of India, Narendra Modi, stood up in Hyderabad and said, for a year, be it at any function, we should not buy gold jewelry. 5 days later, the government, it followed through. The gold import duty, it got raised from 6% to 15%. When you look at the Thangamayil Jewellery, it got dropped by 12% in two trading sessions. And Titan, it got fell by 5%. Kalyan Jewellers, it got fell by 8%. And today, Thangamayil, they have released Q4 financial year of 26 results. The profit is up by 354% and the revenue is 106%. So, the business is super strong, but the government, it made it harder to run. So, is that just an entry point or is there more pain ahead? Let's find out. So, without wasting any time, we can quickly get into the video. Before that, if you are new to my channel, please do subscribe it. If you like this video, please do hit a like button. Let's start with what exactly happened. I want to be more precise here. 7% of the correction was not just an pre-result anxiety or something like profit booking. There were two government actions it triggered it, and I feel both are matters. The action number one is May 10 Sunday. PM Modi at public event in Hyderabad said, I would appeal to people not to buy a gold jewelry for at least 1 year. Now, understanding this particular context, India is mid of microeconomics crisis. The US-Iran-Israel war, it disrupted the Strait of Hormuz. Crude oil, it surged from $70 to $126 per barrel. India's, the Forex reserve, it fell $38 billion in just 2 months. Actually, India imports $72 billion of worth of gold every year. The second one is the crude oil import spending. The government, it needs to reduce the dollars outflow. Gold was the easiest lever for them. So Modi's appeal hit every jewelry stock in India. Titan is down by 5%, Kalyan is down by 8%, and the Thangamayil, it is down by 2 trading sessions. Action number 2, on May 13th, Tuesday, government, they did not appeal, they just acted. The gold import duty, it got increased from 6% to 15%. That is a 10% of the basic custom duty plus the 5% is agriculture infrastructure development cess. The effective import tax looks like 2.5x higher than before over the night. That is the real reason, and this is not something in pre-result noise, not a profit booking as well. A genuine government policy change, it affected the entire sector. Now let's talk about, is this an permanent or temporary? This is most important question. The answer, it determines what you should do. First, we have to think about the Modi's appeal is not a law. There is no ban on buying gold. As of now today, people are still free to walk Thangamayil jewelry and they can buy a gold. Indian household has a deep structural relationship with the gold. Tamil Nadu, it especially, it accounts 40% of total gold consumption. Wedding happens, festival happens. So, the demand, it doesn't disappear. What history tells us in 2013? India, it has faced the same situation. I mean, it had a rupee crisis. The import duty on the gold, it rose to 10%. The gold demand, it got fell for 2 to 3 quarters. And then it was completely recovered. The structural low for the gold in India did not break permanently. The second thought is, there is a partial offset on the cost side. When duty hike was announced, the MCX gold futures, it got crashed 9%. Obviously, the international gold price, it fell. The net impact on Thangamayil's existing hedge inventory is limited. It is something, a new gold procurement, the going forward, it costs more. And this is very important. The 15% on the duty, it is still higher than 2013's 10%. And when you look at from the broader macroeconomic situation, example like ongoing war, rupee weakenings, huge crude, which is getting completely worse. So the demand suppression, it lasts longer for 2 to 3 quarters for this time. What my understanding is, This is something like temporary headwind, not something like permanent destruction. What I mean is like, when I say it is temporary, obviously it must be 2 to 4 quarters of pain. Let's look into the business quality check. Let me separate business story from the macroeconomic issue, because despite everything happened this week, the business itself is exceptional. When you look at the revenue, it had 1,299 crores in financial year of 17 to 8,514 crores in financial year of 26. That is actually 5-year of CAGR of 24% against the industry average is 17%. When you look at the net profit, it is 14 crores in financial year of 17 to 352 crores in financial year of 26. In financial year of 26, the EPS for this particular stock is 113 rupees per share. And the Q4 financial year of 26, which is released today, the profit after tax, which is up by 354% to 143 crores. The revenue is completely up by 106%. So obviously the next question is, the revenue is real or manufactured? Let's check. The gold volume, it grew 15% year on year. Even the gold price, it rose 59%. The volume growth is most important data point here. If the revenue was just riding the commodity price, volume would be flat. Here, the volume is growing, real customers are walking in, and that is the real demand. The diamond volume is up by 46%. The silver is up by 41%. The non-gold revenue share is also rising here. It looks like the business is diversifying. That is exactly what you need to see. The tax paid at 25% effective rate, that is consistent with India's corporate tax structure. You cannot pay real taxes for fake profit for 10 consecutive years. The other incomes near zero throughout the history. No asset sales, no investment gains. Profit quality, it looks clean here. Now let's talk about the cash flow and the debt. Here, the operating cash flow, it seems to be volatile, positive on some years and negative on other years. Financial year of 25 was minus 424 crores. That looks like alarming until you check why. Thangamayil, it has built 790 crores of gold inventory in financial year of 25 as gold price was rising. They were stocking up ahead of price surge. I feel that is a right call. In financial year of 24, they showed 330 crores in positive operating cash flow. I feel like this is proving cycles work. Buy inventory and sell it, then the cash flow will recover. The cash on balance sheet, which is like 381 crores. Dividend it paid every year, growing at 37% of the CAGR. So they don't pay the rising dividend from the fake profits. This is something like 10 years in a row. Now let's talk about the debt. The borrowing, it grew from 119 crores to 913 crores. And when you look at the debt to equity, it fell from 0.80 to 0.64 because the reserve, it grew 10x while the debt, it grew 7x. The interest coverage is 5.2x. The profit after tax, 352 crores, covering interest of 68 crores. This is not a company which is droning into debt. This is a company using working capital loans to financial gold inventory. This is a standard for the sector. Let's talk about the promoter integrity. The promoter holding is 61.6%, which is completely stable. They are the long tenure holders. Two things I always look for the promoter integrity. Number one, the promoter pledge. Here, it is completely zero. Not a single share is pledged. When the promoter pledged the shares, they are telling you they need cash and they are not confident. Zero pledge at 61.6%, which is completely strong. Number two, the dividend track record. Here, they have paid every year for 10 years, growing at 37% of the CAGR. It was never cut. The promoter who manipulates the profit does not pay out a real growing dividend for a decade. The promoter integrity score here is 9 out of 10. Company is completely a founder-led, skin in the game, and they do have a clean track record. Now let's talk about the valuation. This is very important. This particular stock, it is trading around 3,594 rupees. The P for this particular stock is 32x in financial year of 26. The price to book value is 7.89. When you compare this with the Titan, it has 83x of PE. When you do a peer comparison, Thangamayil, it looks relatively cheaper. But here is my concern as a value investor. The 15% of the duty changes the financial year of 27 earnings equation. The market, it was expecting the financial year of 27 EPS is 155 rupees to 160 rupees, which is completely based on pre-policy trajectory. With the duty hike and the demand suppression in financial year of 27, the EPS for this particular stock may come in between like 115 rupees to 130 instead. At 3,580 rupees and the financial year of 27 EPS of 120 rupees, looks like we are paying 30x of earnings. For a company facing like an policy headwinds, that is not something cheap. That is an pricing perfection in an imperfect environment. So what is the fair value for this particular stock? The fair value for this particular stock, it is 2,136 rupees. Okay, when I look into the graph for this particular stock, it looks like 200 EMA, it has crossed the 50 EMA. Obviously, this may indicates it is a dead crossover. It means stock is about to fall. If it touches nearly somewhere like 2,100 or 2,500, then I will think about like buying this particular stock. Until then, I won't be looking into this stock. So what I understand from this particular stock is the business is completely good. It is a great business and it is trading at the wrong price right now. Most of the value investors, they don't chase great business at expensive price. They usually wait for the correction. Once it has reached to a reasonable price, and they will pick into it. Let's wait. Once it has touched 2,600 or 2,500, then I will definitely make another video about this particular stock and I will tell about my investment strategy for this stock. I hope you might have liked this video. If you liked it, please do hit a like button. Thank you so much for watching this video. See you on another good video. Till then, bye.